Hey, what's up, everybody? It is Wednesday, March 17th. Don't fight the Fed. Remember this saying? I bet a lot of people now who are fighting the Fed, they're the ones that were saying that. So what I'm talking about is, as you know, we have seen pretty sizable sell-off in the Treasury market, and yields have popped up to a one-year high on the 10-year Treasury, for example. And while that's completely normal because we're coming out of the pandemic and the economy is recovering, at the same time you got this narrative going on about, inflation. And the Fed today, let me back up before I get to the Fed. A lot of these people who were bearish on the Treasury market and bullish on interest rates, meaning rates going up, they're saying, well, the Fed's going to have to raise rates. The Fed is going to have to raise rates. So the Fed comes out today and it says no rate hikes until 2023. Like, we originally thought it was going to be no rate hikes until 2022, sometime late next year. Now they're saying no rate hikes until 2023. But people are still fighting the Fed. And it's interesting because, again, rates are anchored by Fed policy. And that goes for anywhere along the term structure. I've spoken about this in the past when, a 10-year yield is a reflection of Fed policy over a 10-year period. The Fed is standing pat on rates. As long as it's doing that, there's very little amount of leeway that rates can move up and down. Now, clearly, if you go farther out, that reflects a longer term time horizon. But right now, the Fed is saying, look, it is staying fixed at the current rate. Now, we have seen who the sellers are in the Treasury market. And the quality of those sellers, if I can characterize it like that, is pretty low. In other words, they're mostly small speculators. If you look at the open interest breakdown, if you look at the commitments of traders in the futures market, small speculators are predominantly the ones who are short Treasuries right now. And where we had a concern that banks were going to have to unload treasuries because of this huge reserve tsunami that's coming onto their books, haven't seen any of that. As a matter of fact, banks have been net buyers of treasuries. They've been buyers of mortgage-backed securities. They've been buyers of agency securities. So, there has been some localized selling of treasuries, like in certain issues, but in the aggregate, the banks have been buyers, not sellers. The only ones selling treasuries right now are speculators who are going short the treasury market. Now, there's one other thing. You have to make a distinction between inflation and growth. Those are two different phenomena. You can have growth, which is what I'm saying is happening right now as the economy reopens. And you could have inflation where there's something broken in the system and sellers are able to raise prices. And we had that up until now, maybe still some of that lingering on because of the pandemic, which has caused supply disruptions. Then we had that Texas freeze, which caused a big shutdown in oil production. That stuff is dissipating now. That's going away. What we have is growth and a growth environment, and that doesn't necessarily translate into high inflation or even inflation at a moderate level for that matter. It might pick up some. There's still some of those issues in the economy with, supply shortages, labor shortages, etc. But as the economy opens, we should start to see some of those price pressures moderate. So I'm saying now, don't fight the Fed. The Fed is the monopolist rate setter, and it's telling everybody it's not raising rates. Now, if the Fed came out and said, hey, we're going to start raising rates, then I'd be jumping on here saying you got to short treasuries and just keep shorting treasuries until they say they're going to stop raising rates. Same thing when they say, hey, we're going to cut rates. When they say we're going to cut rates, you want to be a buyer of treasuries. They set the rate. That's why we all sit around every month waiting for these meetings, listening to what the Fed says it's going to do, because they're the rate setters. So they came out today, they said all the way through 2023, we are not raising rates. And I'm saying the bond market has gone too far. The quality of the sellers, for me, is suspect. I don't think they're the savviest group around. They may get it right every once in a while, but for my money, I'd rather bet against them. And we're in a growth environment and not necessarily an inflation, or certainly not, I don't think, a high inflation environment. And a lot of the factors that were causing price increases, they were due to the pandemic, and they're starting to go away. So, don't fight the Fed. And it does remind me, actually, of a situation I think that's similar back in 2010, 2011, in the Eurozone, when we had the Greek bond crisis, the Greek credit crisis, and Greek bond yields were blowing through the roof. Same thing was happening in Spain and Italy. And, yields went way up. And everybody was saying, that's it. The Euro area is going to fracture. It's going to split apart. It's not going to be able to stand on its own. And what happened? The ECB came in, started buying Greek bonds, and yields came down. At the moment the ECB stepped in and said they were open-ended buying of bonds, that's what they were going to do, that's what their policy was, I wrote at that time, and you can go back and look at my blog, you can search my blog. I posted a lot of articles at that time saying the crisis was over. Don't fight the ECB. Don't fight the Fed. Don't fight the central bank. When the central bank is the monopolist rate setter in their currency, they could do what they want. That's what it comes down to. So we'll see what happens with bonds. I happen to think that the move has really kind of gotten ahead of itself. I think the quality of the sellers is suspect. I bet against them. That's just me. And again, don't fight the Fed. That's the moral. And the same people who say that all the time, I don't like speaking in cliches. I'll put it out there now just to support my case. But the people selling treasuries right now are many of the same people who always come out and spout that line, don't fight the Fed. So you got to be consistent in your views. Otherwise, that's just another giveaway of how you don't really know what you're doing. You're just going on a belief. There's no real understanding behind that belief. It's just like a nice catchphrase, and it's working for a time, so it makes you look like you're right. But really, you're just more lucky than right. My new podcast is out. Go listen to it. The link is right here in the description below. And don't forget to check out my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye-bye.